Good morning. We will pay attention to the appropriation account and other entries in Forest Company. Cullinan Limited has an authorized share capital of 2 million ordinary shares. We will only record this 2 million in the note and it will not be used for any calculations. Cullinan Limited issued 400,000 ordinary shares at R5 each on 1 July 2011 and 300,000 ordinary shares at R6 each on 31st of December 2012. So both those dates are before our current year because our current year is from 1 July 2014 up to 30 June 2015. If we look at the ordinary share capital amount, the 3.8 million, that must equal the 400,000 times 5 gives me 2 million, 300,000 times 6 gives me 1.8 million, and that will give me the 3.8 million capital. So that is the capital that was obtained by the company in previous years. Issued a check to SARS to pay the outstanding amount. Now, if we look in the trial balance, we see that the amount that's outstanding for the previous year is 8,000. So that means the provisional tax payments in the previous year was not enough, and the business still owes 8,500 to SARS. So the first entry will be to pay the 8,500. If we look at the income tax account, there's the 8,500 amount that's owed from the previous year, and on the 21st of July, this 8,500 is paid. Now, no amount is outstanding to SARS at the beginning of the year. Then a check is issued to shareholders to pay the outstanding amount. Now, if we look at the second balance there, we see that the amount that was outstanding to shareholders was 20,000. So that was the final dividend that was declared at the end of the previous year. Now we pay that 20,000. So if we look in our ledger accounts, we will see that the opening balance is 20,000 liability to show that that is the money that was owed to shareholders at the end of the previous year for the final dividends, and now that 20,000 is paid. If we look at the next entry, a check is issued for 24,000 to SARS to pay provisional tax. In the middle of the year, the business will do a little income statement to determine how much profit was made for the first 6 months. So all the income will be added together, the expenses will be subtracted, and they work out more or less what was the profit for the first 6 months, work out 28% on that, and then decided to send 24,000 to SARS as provisional tax payment. What is very important to remember is that when this provisional tax payment is made, you cannot record it into the income tax account because you still don't know what is the expense for income tax. You will record the 24,000 in the SARS income tax account to show that the debt that you owe to SARS on the profit for the first 6 months, you are paying at the moment. Declared and paid an interim dividend of 20 cents per share. When the interim dividend is declared in the middle of the year, it will always be paid immediately. So the dividend is declared on all the shares that were issued at that stage. It is very important to look at the date when this dividend is declared. The date is the 30th of December. If we look at our ordinary share capital account, the shares that we had in issue on the 31st of December was the 400,000 and the 300,000 that was issued in previous years. So the total number of shares issued on the date that the interim dividend is declared is 700,000 shares. And they declare a dividend of 20 cents per share. So if we look at our ordinary share dividends account, I will take the 700,000 shares that's in issue on the 30th of December, multiply it with the 20 cents, and show that the expense for dividends is 140,000. The business owes this money to the shareholders, so the shareholders will be credited with the 140,000 to show that this money is outstanding and must be paid to the shareholders. An interim dividend is always paid immediately, so the bank is credited and shareholders for dividends is debited with 140,000 to indicate that this money was paid immediately. Okay, then issued 100,000 shares at R6.50 each. So we are issuing more shares, so the capital will increase 100,000 times R6.50, and the capital will increase with 650,000 rand. That means we had 700,000 shares at the beginning of the year, plus this 100,000, so the shares in issue at this stage is 800,000 shares. The capital value at this stage is 4.450 million. On the 28th of June, a check is issued for 36,000 to pay provisional tax again. That means that the little income statement was completed to see how much profit was made for the second part of the year. And the check is issued to SARS, so the SARS account will be debited to indicate that the debt on the profits that the business made during the last 6 months is paid the 36,000. You will not show any entry in the income tax account because you can only use the income tax account after the final profit for the year was determined. Declare a final dividend of 20 cents per share. Now, if we look at the date for the final dividend, it's on the 30th of June. If we look at our ordinary share capital account, the additional shares were issued before that date, so it means that we've got 400 plus 300 plus 100, 800,000 shares on which 20 cents per share will be paid. So in my ordinary share dividends account, I will take the 800,000, multiply it with the 20 cents, and show that the expense increased with 160,000. Who do you owe the money to? To the shareholders. So the shareholders will be credited with the 160,000 to show that the money is owed to the shareholders. They don't say that the final dividend is paid immediately. Therefore, there will be a balance in the shareholders for dividends account that will be brought down to the first day of the next financial year, and it will only be paid at the beginning of the next financial year. So at the end of this current year, this will be a current liability in the statement of financial position. The net profit for the year is 480,000, and the income tax is 28% of the net profit. This net profit is calculated after all the adjustments were completed. So entries were completed to correct mistakes, to do entries for omissions that was not recorded during the year, for entries that's only done at the end of the year, like depreciation. Then the books went to the auditor, and after the auditor is satisfied that everything is correct in the books and they are prepared to give the auditor's report, you will only determine the net profit then. And this gives us the 480,000. As soon as I know what is the final profit for the year, I can calculate the expense for income tax. So for the first time in this whole year, you will write in your income tax account and you will show the 480,000 profit times the 28% and indicate that the total expense for the year is 134,400. Who do we owe this money to? To SARS. So SARS will be credited with 134,400. Now, if I add up the SARS account, I see that the credit side is 142,900. The debit side is smaller than the credit side. So if we subtract them from each other, we see that there's a balancing figure of 74,400. That will be brought down to the next financial year. So this will be recorded in the statement of financial position as a current liability. This account indicates that the provisional tax payments were not sufficient that was paid to SARS. That's why there's 74,400 outstanding that must still be paid to SARS. Okay. At the end of the year, they decide to buy back 100,000 shares and they will pay R6.20 per share. As soon as we see there's a repurchase of ordinary shares by the company, you have to follow 3 steps. The first one is determine how much money will be paid to the shareholders. Then you determine what is the average price per share, and if they pay more than the average price, it means that you will have to take some of the money out of your retained income. So we will do that calculation first of all and look at the average price of the shares. 400,000 shares were sold at R5, gave me 2 million rand. 300,000 times R6, 1.8 million. 100,000 times R6.50, 650. So the total number of shares that was issued is 800,000. The total capital that was received was 4,450. So if I divide it, I work out what is the average price per share. Now we determine how much money will be paid to the shareholders. We will buy back 100,000 shares. The amount that will be paid to the shareholders will be R6.20. So it means that 620,000 Rand will be paid out. If we look at this average price of R5.56 and we look at the amount that they are paying the shareholders, we see that they are paying more than the average price. As soon as they pay more than the average price, it means that some of the money will be taken out of retained income. Why will the company be prepared to pay more than the average price and reduce their profits? Because the retained income is profits that was kept back in the business in previous years. It actually belongs to the shareholders, and if the shares are repurchased, they are entitled to this profit that they didn't receive in the year when the profit was made. So we look at the buyback price. We calculate it is 620,000. The average price is 556. So what we can take out of the capital account is 556,000. And the amount that will be taken out of retained income will be 64,000 Rand. If we look at the ledger accounts, we will see that the ordinary share capital account will decrease with the average price, 100,000 times R5.56. The retained income will reduce with the amount that was paid higher than the average price. If we look at our ordinary share capital account now, we see that the closing balance is 3894. So it means that our capital decreased from 4450 to 3894. and the number of shares was 800,000 minus the 100,000, so the number of shares reduced with 100,000. So it reduced from 800,000 to 700,000. The amount in the retained income account, the opening balance that was retained out of profits from the previous years, is 340. Out of that 340, 64,000 was taken to pay the shareholders. So the balancing figure, the 276,000, will be transferred to the appropriation account. And I will credit the appropriation account to complete the double entry. And we will also take from the profit and loss to the appropriation account the profit for the year. That means the total amount that this company has available at the end of the year to distribute is 756,000 rand. They will take income tax out of this amount, so the income tax account will be credited and appropriation account will be debited. The ordinary share dividends account will be credited with the total amount, 300,000, and the appropriation account will be debited with the 300,000. So because ordinary share dividends and income tax are expenses, they must be closed off at the end of the year. And the income tax and dividends will be taken out of the profits that was made. That's why they are closed off to the appropriation account. If I work out the balancing figure now, I see that the retained income at the end of the year is 321,600. So at the beginning of the year, it was 276. Now it's 321. So all the retained income was kept back in the business, plus an additional amount to increase the retained income to 321,600. So the next financial year will be started with a retained income of 321,600. If we look at the notes that will accompany the balance sheet, we see that the authorized share capital was 2 million. We will just indicate that that's the authorized share capital, and we will not use it for any calculations. We will determine how many shares were issued in previous years. So the total number of shares issued in previous year was 700,000. The ordinary share capital account at the beginning of the year was 3.8 million. During the current year, an additional 100,000 shares were sold at a price of 6.50 rand, so the capital increased with 650,000 rand. At the end of the year, 100,000 shares were repurchased, so it means that the average price was determined at 5.56 rand, and we had to reduce the capital amount with 556. So the closing balance for the ordinary share capital at the end of the year is 3,894. If we look at the retained income, the opening balance at the beginning of the year was 340,000. The net profit, and remember the profit must be after tax, because the shareholders are only entitled to the profit after tax was paid to SARS. So I will take the profit minus the tax and show that the profit after tax is 345,600. We repurchased 100,000 shares, and the amount that was above the average price of 556 is taken out of retained income. Then the total amount that must be paid for dividends during the year will reduce the retained income with 300,000. The paid amount is always for the interim dividend, because the interim dividend is paid immediately. The recommended amount is the final dividend, because they recommend that that amount must be paid out, and it's normally outstanding at the end of the year. Then I work out what is my closing balance for retained income, and that is the balance that will be carried over to the next financial year.